Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today consignment accounts. Consignment means delivering the goods or sending the goods is called consignment. In today's business, everyone intention is expanding the business. For that, different strategies they will use. Consignment is one of the common strategy in the business. Here, there will be two parties involved, consigner and consignee. Here you can see this process. Here consignee is selling the goods to the customers, buyers, and prepares purchase order to the consigner. Consigner shipped products to the consignee. Consignee sold the goods. Then he prepares purchase order to consigner. Then he generates invoice for the product which are sold, and inventory forecasting will be done. Then ship the product based on the demand. Here, if you see, when consigner is also called as principal, sends the goods to consignee, it is called as goods sent. It is not sale. On behalf of consigner, the consignee agent sells the goods to the buyers. Sells the goods to the buyers. It is called as goods sold. Goods sold. Then he receives sale proceeds from the buyer. Then he remits. It is not sale proceeds. He remits the whatever sale proceeds he received from the buyer to the consigner and receives commission for that. A predetermined amount will be received for on the consignment sold from the consigner to the consignee. So, how many parties? Majorly there are three parties, but we will consider for the accounting purpose only the two party. It is consigner and consignee. Consigner is also called as principal, who sends goods, who want to sell goods but he is not able to sell. On behalf of him, consignee is going to sell for a predetermined commission. It is when consignee sold the goods to the buyer, it is called as sales. When consigner sends the goods to the consignee, it is called as goods sent. Because in while recording the entries, accounting transaction also, we will show it as goods sent only. Let us understand in detail what is consignment. Consignment means delivery or send. Consignment is arrangement made between the two parties for selling the goods in different places. For the consideration is called the commission. So consignee will sell goods for the commission, and agreement to includes active parties. The active parties are called manufacturer or wholesaler and his agent, this consignee. And manufacturer or wholesaler send goods to the place of agent, and agent work on behalf of the manufacturer for selling the goods in his place for a commission on sale. Here consigner, the two party which we have discussed, agent and the consigner. Consigner may be here manufacturer or wholesaler and is also called as principal, and agent relationship of consignment in the business. Here consigner remains as a owner only of the goods sent or consignment basis till the goods are actually sold by the consignee. Once it is sold, then the owner changes. Until that, the consigner remains as a owner only. Then consignee. Consignee is the another party, the agent, one who is selling for the commission, okay, for predetermined commission. Consignment which he sell, that he will sell. For the relationship between the consigner and consignee, consignment relation it is called. And you have to note that here consignee does not own the goods received, because already I have told it is the consigner only remains as the owner until it sells the goods to the buyer. Here he is not a owner, he is just on behalf of consigner, he is selling the goods. Then pro forma of invoice. It is a statement prepared by the consigner. This includes the details of goods consigned, that is, what type of goods is sent, quality of goods, quantity of goods, price, etc. will be mentioned. And the statement will be sent to the place of agent along with the goods on consignment. And this will be an evidence for the goods consigned, and consignee records goods in his book based on this statement only. That is called pro forma of invoice. Then accounts sale. This is the periodical statement prepared by the consignee, and this contains the details of whatever goods sold, expenses paid, commission charged on sale, and net amount due to the consigner. And this will be sent to the consigner periodically. And these are the accounting transactions at the consignee place, and consigner make necessary entries in his book of account based on this statement. Then consignment expenses. The consignment expenses are which are incurred on the consignment by the consigner or consignee. Here both spends goods or expenses on the consignment. These are broadly classified into non-recurring expenses, that is direct expenses, and recurring expenses. Non-recurring expenses means once again it is not again and again you are not paying. That is why it is called as non-recurring expenses. It is also called as direct expenses. Recurring expenses, it repeats. Again and again you need to pay these expenses. Those are called recurring expenses, indirect expenses. Here, the non-recurring expenses are, non-recurring expenses occurs for both the consigner and consignee also. The non-recurring expenses of consigner are loading charges, dock dues, for forwarding expenses, carriage, packing, octroi, insurance in transit, custom duty, freight. Non-recurring expenses of consignee is unloading charges, freight to go down, insurance in transit, octroi, carriage to go down, railway dues, other expenses to make goods saleable. These are the non-recurring expenses of consignee. Then recurring expenses of only consignee, it will come, it repeats, that is establishment expenses, commission on sale, expenses on goods returned or damaged, brokerage, selling and distribution expenses, insurance of go down rent, storage charges. Now, the accounting treatment of consignment account. Here, calculation of commission, because we are paying commission to the consignee for the work done, right, for sales which he has done. That will be calculated with the three different methods: ordinary commission, dell'Credere commission, overriding commission. Calculation of loss of goods will be done on normal loss, abnormal loss. Majorly it is classified. Calculation of unsold stock. Accounting treatment in the books of consigner. Journal entries will be there. The ledger accounts, there will be totally 4 ledger accounts will be prepared in the books of consigner, that is consignment account, goods sent on consignment account, consignment stock account, consignees account. This will be prepared. Accounting treatment in the books of consignee, journal entries, ledger accounts, only consigner account prepared. Yes, let us understand how to calculate the calculation of loss of goods. The amount of and the quantity of goods lost in the consignment are called loss of goods. Those losses are common in both the consigner and consignee, but entries have to be made by the consigner himself. Here, consigner himself will record the entries for the loss of goods. There are two types of losses, that is normal loss. So these losses are called unavoidable losses. This is called due to inherent nature of goods, evaporation, normal leakage, or spoilable, weight loss, etc. These are normally caused on the consignment of goods. When you are sending goods, these are normally caused. That is why it is called as unavoidable losses. And these losses are no realizable value. There will be no realizable value on the normal loss of goods, and no journal entries will be passed for the normal loss. And there is no value, because of there is no value, there will not be no journal entries. And normal losses are common and lost at both the places, in consigner place also and consignee place also. And there will be no accounting treatment will be done, except value will be adjusted by the increasing the cost per unit. Units will be increased and adjusted. The calculation of normal loss is goods sent by consignor, quantity, amount, non-recurring expenses should be added. Then to the balance amount, normal loss in transit, that should be deducted. Abnormal loss in transit, that quantity will be recorded. Then we will get goods received by consignee. Then abnormal loss. Abnormal loss are avoidable losses. This is caused by abnormal reasons like fire, theft. These are the abnormal losses. And consignment of goods, generally there will be realizable value will be there for the abnormal loss of goods. And this will be, there will be renovation or repairs, there will be fetch of some values. So those losses may be happen in both the places, the consigner place also and consignee place also. For abnormal losses, journal entries will be recorded and realizable value will be shown. Amount of abnormal loss will be debited to the abnormal loss account and credited to the consignment account. We are debiting to abnormal loss account and we are crediting to consignment account. And similarly, the realizable amount on abnormal loss will be credited to abnormal loss account, and balance will be transferred to profit and loss account. Balance we are transferring to profit and loss account. Goods sent by consigner, then add non-recurring expenses to the balance amount. You need to deduct abnormal loss in transit. Then normal loss in transit quantity will be shown. Then we will get goods received by the consignee. Then calculation of commission. As I already said, the consignee will work for this commission only. From the consigner, he is going to receive for the work done on behalf of consigner, right? That will be calculated with the different method. Ordinary commission. Ordinary commission will be calculated payable on the total sale proceeds. Percentage or per unit amount of total sales units are the basis of calculated ordinary commission. Del Credor commission is, it is the amount of commission which is payable on the total sale proceeds, or percentage or per unit amount on total sales will be taken. Units on the basis of calculated ordinary commission, like how we are calculating ordinary commission, same way we are calculating Del Credor commission also on the total sales. Overriding commission, this is the extra commission payable on the amount, that is profit made by the consignee on selling the goods more than the price at which consignor sent the goods to consignee. On the profit it is called, that is why overriding commission. Then calculation of unsold stock or closing stock. The value of unsold stock are kept at the place of consignee on the date when the final account of consignor are prepared, are called the unsold stock or closing stock, and those are properly valued and credited to the consignment account for a certain profit or loss on the consignment. Unsold stocks are valued at the cost price or market price, whichever is least. We are calculating, we are considering value of cost price or market price, whichever is least. And there are 3 steps to calculate the unsold stock or closing stock. First step, you need to calculate goods received by consignee. That is, goods sent by consignment, add non-recurring expenses minus normal loss in transit. If it is there, abnormal loss in transit, then we will get goods received by consignee. Then step 2 is you need to calculate goods available for sale. That is goods received by consignee, add non-recurring expenses of consignee. Here we are adding the consignee non-recurring expenses. Then abnormal loss in go down. Go down abnormal loss will be taken because we are calculating closing stock or unsold stock which remains with the consignee on the last day of preparing the account, consignment account for the consigner. That is why we are taking the loss in go down. Okay, then we will get goods available for sale. Then we are calculate unsold or closing stock. Unsold stock is goods available for sale minus goods sold or returned. That should be deducted to get the unsold stock. Value of closing stock will be calculated by dividing goods available for sale in rupees divided by goods available for sale in quantity into unsold stock. Yes, this is all about the commission and losses and calculation of the unsold stock. Let us understand now the journal entries for the in the books of consigner and consignee for the consignment which is sent for sale. In the books of journal entries, in the books of consigner, consignee, there will be two chances. One, he can send goods at cost or at invoice price. So when he send goods at opening stock, opening stock on consignment, consignment, this entry will come only in the books of consigner at cost. At cost, then the entry is consignment account debtor to consignment stock account. Consignment stock account. In case goods opening stock is recorded at invoice price. Invoice price means more than the cost price. That is why it is called as invoice price. Invoice price is consignment account debtor to consignment stock account. Loading charges should be cancelled. Load to be cancelled when it is recorded at invoice price. Then cancellation of load on the opening stock. Here load to be cancelled, no invoice price. The entry for cancellation is entry for cancellation of load. Stock reserve account. Stock reserve account debtor to consignment account. Here we have debited consignment account. Here we are crediting consignment account. We are cancelling the load charges. Consignment account. When it is invoice price, only that time this entry will be passed. And for the opening stock, no entry in the consignee's book. The next, goods sent consignment. Goods sent on consignment. When the goods sent on consignment, again when you are sending at cost price, entry is consignment account debtor to goods sent on consignment. Goods sent on consignment account. Then if it is at invoice price, consignment account debtor to goods sent on consignment account. Loading charges should be cancelled. Load to be cancelled. For that entry is the entry which you have passed at the time of recording opening stock now. Same entry here also you are passing, but you are debiting goods sent on consignment account debtor. You are crediting consignment account. Instead of stock reserve, you are debiting the consignment as goods sent on consignment account debtor to consignment account. This is for cancellation of load charges. When you send at invoice price, only at the time of invoice price this entry will come. Otherwise you are not recording this entry, only the consignment account debtor to goods sent on consignment account. This entry you are recording. Again here also no entry for him. No entry. If any advance received from consignee by consigner. In advance received from consignee by consigner, then he is receiving the amount, right? Through bank he will receive, or this is in the books of consigner we are recording. Bills receivable account debtor should be debited to who is paying? Consignee. Consignee account should be credited. Consignee account. Now, in the books of consignee, to whom we are paying? To the consigner. So, consigner account should be debited. Debit the receiver, right? Consigner account debtor to through bank account, or it is bills payable account for the consignee. For consigner it is receivable, he is receiving amount, that is why it is bills receivable. For consignee it is bills payable. This is the entry for the advance if they are paying. Then discounting of bills receivable by consigner. Then the entry will be bank account debtor discount, because it's an expense, is discounting his bill. Discount on bills account debtor we are debiting to bills receivable account, and there will be no entry in the books of consignee for this, because the bills receivable, whatever amount he is receiving, that he is discounting, that is why. The next entry is discounting After discounting expenses incurred by consignor by consignor. For the expenses incurred on consignment, he is incurring the expenses. So consignment account should be debited. It is an expense, so we are crediting through bank or cash account because we are spending cash or through bank. That is why we are crediting cash or bank account on consignment account. Again, this is expenses incurred by consignor. So that is why no entry in the books of consignee. Then next is when goods in transit. When goods in transit. Goods in transit at cost, because goods can be sent in two different prices, at cost price or at invoice price. When it is at cost price, goods in transit account debtor to consignment account. Consignment account. For invoice price, at invoice price, goods in transit account debtor to consignment account. Load should be cancelled. Whenever, remember always, it is at invoice price, load to be cancelled. You have to pass one more entry for the cancellation. And there is no entry in the books of consignee for this. For the cancellation of load, the entry is consignment account debtor to goods in transit account. Goods in transit account. Okay, there is no entry for goods in transit. That is why there is no entry for the cancellation of loading charges also. Now, when the expenses are incurred by the consignee. Expenses paid by the consignee. In the books of consignor, consignment account debtor to consignee account, because the consignor will return later that amount. That is why we are crediting consignee account. Here, consignor account debtor to bank or cash account. This is the entry for the expenses paid by the consignee. Then sale of goods by consignee. There will be chances of two types of sale. First one is for cash sale. Cash sale. If goods are sold on cash basis, then consignee account debtor to consignment account. Consignment account. So this is the entry in the books of consignor. In the book of consignee, bank account debtor to consignor account. Consignor account. If it is credit sale, commission paid on del creditor basis, consignee account debtor to consignment account. In the book of consignee, consignment debtors account, account debtor to consigner account, consigner account. If commission is not provided, if commission is provided, this entry we are passing. If there is no commission, only in the books of consigner entry will be passed. That is consignment debtors account debtor to consignment account, to consignment account. There is no entry in the books of consignee. Only in the book of consigner entry will be recorded. The next one is commission payable by consigner to consignee. Commission payable. Commission payable in the books of consigner, consignment account debtor to consignee account. In the book of consignee, consigner account debtor to commission account. It is an income for him, so commission account we are crediting, commission account. The next one is amount received from, amount received from consignment debtors, or credit sale amount. If after receiving, entry is, there will be no entry in the book of consigner, because consignee sold the goods, so he will receive the amount. Bank account debtor to consignment debtors account, debtors account. See, at the time of sale we are debiting the consignment debtor account, so here we are receiving the amount, so we are crediting the consignment debtors account. If commission is not provided, if commission is not provided, then the entry is consignee account debtor to bank account. In the book of consigner, in the book of consignee, bank account debtor to consigner account. This entry we are passing in case it is directly collected by consigner to consignment debtors account, to consignment debtors account. If in case any bad debt is connected, if del creditor commission is paid, there will be no entry in the books of consigner. In the book of consignee, bad debt account debtor to consignment debtors account, debtors account, account. The next one is commission account debtor to bad debt account. Bad debt account. If commission is not provided, then the entry is in the book of consignor. We have to pass entry, that is consignment account debtor to consignment debtors account. Consignment debtors account in the book of consignor. No entry for consignee in case commission is not provided. Then entry for goods returned by consignee. Returned by consignee. Goods returned by consignee. At cost, goods sent on consignment account debtor to consignment account. There will be no entry in the book of consignee. At invoice price, goods sent on consignment account debtor to consignment account. Consignment account. No entry in the book of consignee. Then for the cancellation of loading abnormal losses, only in case of goods sent at IP, that is invoice price. Then in the book of consignor, consignment account debtor to abnormal loss. This abnormal loss we are recording. For normal loss, no entry will be passed, only quantity will be adjusted to abnormal loss. There will be no entry in the book of consignee. When the consignor is maintaining. And this entry when goods are sent at invoice price. Then we are adjusting. Then closing stock. Closing stock. On opening stock we have recorded, no? Like that we have to record the closing stock also. Consignment account. If goods sent at cost price, at cost, consignment stock account debtor to consignment account. Consignment account. No entry in the book of consignee. If it is at invoice price, then sent at invoice price. Consignment stock account debtor to consignment account. Consignment account. Loading to be cancelled. For recording the loading stock reserve, we are creating entry of stock reserve in the books of consignor. Consignment account debtor to stock reserve. This is for invoice price stock reserve. Here, no entry. Then closing goods sent on consignment. Closing goods sent on consignment. Goods sent on consignment account debtor to purchases or trading account. Here it is no entry. The last one, you need to adjust the profit or loss. In case of profit, entry is consignment account debtor to profit and loss account. No entry. For loss also, for profit also. In case of loss, you are debiting profit and loss account debtor to consignment account. And the last entry is final remittance. For the final remittance, in the book of consignor, bank account or bills receivable account debtor to consignee account. In the book of consignee, consignor account debtor to bank account or bills payable account. This is about journal entries in the books of consignor and consignee. I hope you all understood. In the next classes, we'll understand the ledger accounts of in the books of consignor and the consignee. Thank you for watching. Have a great day.